When it comes to purchasing a home, your credit score plays a significant role on the interest rate you qualify for. So that's why in today's video, I'm going to be going over 5 key tips on how to keep your credit score sparkling. Welcome back, guys. It's Tom here from Moffat Mortgages. Thanks again for tuning in, and as always, please like the video down below as well as subscribe to the channel and hit that bell icon while you're at it as well. That way you don't miss out on future videos. Whether you're someone that's just trying to establish a credit and build it, or if you're someone that's trying to give your credit score a boost as fast as possible, just note that these things do take time and patience. However, to give your credit score a boost, consider doing each of the following tips. Number 1, monitor your payment history. Your payment history is the most important factor when it comes to your credit score. So let's go over some key tips on how to improve that payment history. You should always make your payments on time. When it comes to me personally, when I use my credit cards or if I'm using money on my line of credit, I don't like having a balance on there at the end of the day. So closer to the end of the night, I'll always pay off that credit card. It's just a good habit that I've established personally, and it's something you should consider doing yourself. Now, with that being said, if you are using your credit cards or your line of credit and you don't have money to pay off that full balance, at least pay the minimum amount due at the end of the month. So for example, if you have $100 on your credit card and your statement is showing that you need to pay a minimum of $10, pay that $10. Now, if there is a situation where you think you're going to have trouble paying that bill, contact the lender right away and tell them your situation. You never know what they might do to help you out. And lastly, don't skip a bill even if that payment is in dispute. Number 2, use credit wisely. Firstly, don't go over your credit limit. Now, this may seem obvious to not go over that credit limit. However, some people forget how much of the credit limit they have on their credit card or the line of credit. So sometimes they forget that, say you have a $15,000 credit limit and you put on a $20,000 charge, that's going to significantly hurt your credit score. Now, a good rule of thumb is also to use less than 35% of your credit limit. So for example, if you have a home equity line of credit, also known as a HELOC, and your credit limit is $100,000, don't use more than $35,000 of that HELOC. Now, of course, there's going to be situations where you do need to use that more than $35,000, and that's okay. Just know that if you have that balance sitting on your credit, it may actually lower your credit score over time. The reason why is because if you use a lot of your available credit, the lender sees you as a greater risk. And this is true even if you do pay your balance in full by the due date. And tip number 3, increase the length of your credit history. The longer you have a credit account open and in use, the better it is for your credit score. Your credit score may actually be lower if you have relatively new credit accounts. Also, if you transfer an old account to a new account, that new account is considered new credit. So for example, some credit card companies offer a low introductory interest rate for balance transfers. So this means you can transfer your current balance to the new product, but keep in mind this new product is considered new credit. If you have an older account, consider keeping that open as well, even if you don't use it. And if you don't use it once in a while just to keep it active. But also be careful that you make sure that there's no account fee if you're not using it. And if you're not sure if there is an account fee, check your credit agreement that you first got when you signed up for that account. It'll say in there whether you have that account fee or not. Now, tip number 4, limit the amount of credit applications and credit checks. Now, this isn't to scare you and say that a hard hit on your credit is going to be the end of the world for your credit score. That's not the case. What I'm saying is try to limit it as much as possible and not do it every month. Now, it's likely that you're going to be shopping around for some credit from time to time. Now, when you do that and the lender's asking for a credit bureau, that's considered an inquiry. And inquiries are also known as credit checks. If the lender sees that there's too many credit checks on your bureau, they may either think that you are either A, seeking credit urgently, or B, living beyond your means. So let's go over how to control the number of credit checks. So to limit the amount of credit checks on your report, the first one's obvious: limit the amount of times you're applying for credit. Now, the second one's huge, and most people don't know this. However, when you are applying for a mortgage or a car loan, try to do that within a 2-week period. The lender will see this as your shopping period, your grace period. If you are doing it within a couple months, that's where you'll see your credit start to crumble a little bit. And that's because you're going to have multiple inquiries over a couple months. which is going to hurt that credit. Now, if you are shopping for a mortgage, it's a good idea to either A, fit in all those lenders within that 2-week period, which oftentimes can be a little stressful if you're trying to go to 5 different banks within a 2-week period, or B, you can actually go to a mortgage broker who only pulls your credit once typically when they're doing an application, and that mortgage broker will have access to multiple lenders. Now lastly, when it comes to trying to control the number of credit checks you have on your bureau, just keep in mind that you should only be applying for credit when you need it. So what is a hard hit versus a soft hit? Some examples of hard hits include the following: applying for a credit card or a line of credit, some rental applications, some employment applications, and even when you go to buy a cell phone. Now, soft hits are credit checks that appear on your credit report, but only you can see them. Now, it's important that these soft hits don't affect your credit score in any way. So here's a few examples of what soft hits include: requesting your own credit report, businesses asking for your credit report to update their existing account you have with them, and websites like Credit Karma to check your credit score. Now let's move on to tip number 5, use different types of credit. Now this may seem a little contradictory, however, your credit score may actually be lower if you only have one type of credit product, like a credit card. It's better to have a mix of different credit products, such as a credit card, a car loan, or a line of credit. Now it's important that you don't just open up all these different credit accounts and start abusing them and not pay them on time, because ultimately that's going to hurt your credit score more. So there you have it. Those are my 5 key tips on how to keep your credit score sparkling. Now it's important to note that your credit score can have a direct impact on the type of loan you get for a mortgage, as well as how high your interest rate is going to be. And worst of all, if you do have a poor credit score, it can be the deciding factor on whether you get approved for a mortgage or not. So that's it for today's video. I hope you guys enjoyed this one. As always, if you have any questions, please comment in the comments section down below. I'd love to answer any question you guys have.